Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Nvidia's earnings report casts a shadow over Asian equities as the chip giant underwhelms investor expectations. Environmental alert. The Pentagon warns an abandoned oil tanker in the Red Sea appears to be leaking after an attack by Houthi rebels. And Israel launches deadly raids in the West Bank in the latest surge of hostilities in the Palestinian territories. It has just gone 8 a.m. across the Emirates. I'm Johanna Versace in Dubai. Well, the major event this week was always going to be those Nvidia earnings. They came through last night. And even though the numbers were pretty solid, the reaction in the market was quite negative, trading down almost 6%, almost 7% at one point in after hours. So we're going to spend a good chunk of this show talking through those earnings, the ramifications on broader markets. But as you can see right now, the impact on NASDAQ is also pretty negative, too. Into the close yesterday, there was some nervousness. The NASDAQ pulled back 1% by the close. Then there's a continuation of that negativity as we look at these futures down 0.7%. S&P futures also leaning negative, down 0.3%. Remember, it's not the only data to watch out for this week. We've got jobless claims today. Very important when you think about the U.S. labor market. And then, of course, that core PCE figure that we've been talking about from an inflation perspective coming on Friday. 10-year yields trading steady at around 3.84. Haven't moved a lot either way. But again, the market is still pricing in about 100 basis points of cuts for this year. And then Brent sticking at around $78. And really, the energy complex, interesting here. We will talk more about it on the show, but struggling to get a sustained bid despite everything that's going on, whether you talk about the Libyan supply disruptions, rise in geopolitical tensions, and U.S. inventory stockpile dropping somewhat. Switching over, let's talk about Nvidia, though. I thought it was interesting in the context of the price action. The stock right now is trading at around $125, but the target price for many analysts is still sitting at around $145. So $146 is where we have. We'll see if any downgrades come through, but ultimately the analyst community is still pretty bullish on Nvidia prospects here. All right, let's turn to Asian markets now. Huang is in our Singapore studio standing by. Avril, what has the reaction been on Asian markets to Nvidia earnings?
It's looking pretty negative, but not as bad as we saw at the start of the session, as we're seeing some of these chip stocks actually managing to pare the declines. Yet, I think the ramifications of that high bar not quite being met by Nvidia is rippling through into the chip stocks, and you're seeing the Bloomberg gauge of them actually in negative territory, the likes of SK Hynix. Of course, this is a key partner for Nvidia, tumbling about 6%, the most in 3 weeks. Now, elsewhere in the region, I also wanted to highlight, because it's not just the earnings from the chip giant that we are passing. It is also about some of these Chinese names, including Meituan. Remember how earlier in the week, Pinduoduo earnings along with Nongfu Spring really shocked and triggered these warning signs about the Chinese economy. Meituan actually beat on sales, and it's actually showing how its core food delivery business is faring quite well. So a bit of an outlier, gaining 10% and helping to cap the declines that we're seeing on the Hang Seng today. That's what we're seeing in the Asia-Pacific. Joanna.
Avril, thank you so much. That was Avril Huang in Singapore. Now, on to the top story. Nvidia shares tumbled in late trade after delivered an underwhelming forecast and admitted production snags with its highly anticipated Blackwell chips. But speaking exclusively to Bloomberg Technology, the CEO, Jensen Huang, brushed off those concerns and told us they are ready to ramp up production.
We're going to have lots and lots of supply, and we will be able to ramp starting in Q4. We have billions of dollars of revenues, and we'll ramp from there into Q1, into Q2, and through next year. We're going to have a great next year as well.
Let's talk more about this. Bloomberg Intelligence senior analyst Robert Lee joins us now. Robert, great to have you with us. So revenue numbers for the quarter came in at $30 billion. That was up more than 120% year on year. And yet the market was still disappointed. Were expectations just too high?
I think that's it. Again, I don't think there's any cause for fundamental concern. Demand continues to outstrip supply. This company's got the market to itself for at least the rest of this calendar year and into the first part of next year. So no fundamental questions at all. It's about a mismatch of market expectations, again, what's priced into the stock on a very punchy valuation, and I think that's what's caused disappointment. So that they actually did beat reported numbers, but the magnitude of the beat was far lower than I think has been commented on, than we've seen in previous quarters. And also, if you look at the headline numbers, this company's been delivering very strong top-line growth. That rate of growth is moderating, both in the quarter they've reported and into the coming quarters. So again, the second derivative is slowing down.
Yeah, it is remarkable that it's not enough to beat anymore. You have to substantially beat in order for the stock to continue rallying. Let's talk about Blackwell, though, because that was a big focus for the investor community. Many analysts were concerned about some production issues they were facing there. What did we get from the earnings call?
Okay, I suppose we got a little bit of reassurance in the near term. This product is now sampling to customers, and they expect it to enter volume production from the tail end of this year, fiscal year, that is. And I think Jensen Huang said they could generate several $1 billion in their final quarter of this fiscal year. So that's all great. But someone who has a background in semiconductor equipment, just give you a quick analogy. Say you were an expert cake maker, you made one, and then being told by your friends and relatives, well, we've got 300 guests coming round, you've got to make 20 of these. Even if you're a great cake maker, that's going to be quite a tough challenge, isn't it? Similarly, ramping up a highly complex chip like this in volume on time is a non-trivial task. So I'm not saying they're going to miss deadlines, but I think the residual risk is still there. So we need to watch that carefully into next year. So near term, yes, things are getting back on track, but there is residual risk on Blackwell.
Yeah, a big question for investors. And of course, Robert, everybody likes cake. Bloomberg Intelligence Senior Analyst Robert Lee, thank you for joining us. All right, to continue the conversation now and analyze what the impact is going to be on broader markets, I've got Maurice Gravier, the Group CIO for Emirates NBD Wealth Management. Good morning to you, sir. Good to have you with us.
Morning.
How should the markets be interpreting Nvidia results?
Well, first, there's no way we can say that it was bad numbers, frankly. There's no way. And even the forecast is just a bit lower than the higher part of the analyst expectations. So I wouldn't say that it's bad in any way. The thing is that when you're priced for perfection, you're vulnerable. When you're priced for above perfection, you're even more. And it's a crowded one. People are long, day traders are active. So I wouldn't spend too much time on the volatility itself and on the way markets have taken it. For the broader market, for me, the good news is that it means that there is continued demand for AI and especially AI infrastructure building. That's as simple as that. But that's the only takeaway we have, because the key question of the market is probably the payback on AI investment, and we don't have answers yet.
It seems as though if you were not specifically or directly invested in Nvidia results have done enough to keep the market going, because as you say, they still did beat. There's still a lot of positive stories to take away from the earnings call, and therefore this big data, this big event for the market has come and gone and shouldn't necessarily there shouldn't be any reasons to be bearish on the back of this for the broader market if you're not invested in Nvidia.
It's very interesting to say that. I agree with you, but there's no reason to be incrementally bullish, I think, because what it tells us, it's just we are still in the infrastructure building phase, and we still don't know about the timing of the payback. It will happen. We all believe in AI. However, you remember the big scare of late July, early August, saying, okay, where is my return on this investment from the Alphabet, the Apple, the Amazon of this world? And we're still questioning that. The AI is a mega trend, there's no doubt, but markets tend to overestimate the short term, sometimes underestimate the long term. We are in this kind of timing mismatch.
Well, now we can go back to analyzing what the Fed are going to do, right? Because the market pivots between Nvidia and Fed in the commentary. There are a lot of rate cuts priced in, about 100 basis points. I know you're not in the big cutting camp. So if they don't end up cutting 3 or 4 times this year, how do you think the market reacts to that?
That's a big question, and I'm afraid the market cannot react very positively. We always had 2 to 3 and mostly two cuts for 2024. The good news is that we started the year with market expectations at already 6 or 7 cuts, and then it reset to almost 0 somewhere in April or May, and the market didn't suffer too much. So we may see these kind of things. First, there is a contradiction because the markets, all asset classes, are now aligned on a scenario of soft landing. We believe in it, but soft landing with massive rate cuts is not consistent, and we think we should have 50 basis points, not 100. So there is a short-term risk around the Fed meeting in September, probably.
Yeah. What do you think the Fed is going to be placing more emphasis on? We've got jobless claims today, PCE, which is their preferred inflation gauge, and then, of course, NFP numbers next week. will we get signals from the data that's to come in the next 10 days as to whether they may even consider a 50 basis point cut in September?
Yeah, I think it's definitely employment at this stage because core PCE can be at 2.6, 2.7, 2.5. I mean, it doesn't change the big picture and the fact that we've seen this disinflation. It's all about employment. And from the latest updates we had, including Jackson Hole, it was about this dual part of the mandate. So it's all about employment. However, I don't think that employment is going to collapse. We are not in recession territory at all. And if we have 160, 180,000 job creations, is it bad? I'm not sure.
Yeah, they're still creating jobs, almost 200,000 jobs a month, even with the downward revisions. So where have you been putting your money?
So we are in a nice and uncomfortable position, if I may. Nice because in July we reduced equities to add to rate-sensitive assets and gold, real estate, bonds. We increased duration. It works fantastically well, which is the nice part. The uncomfortable part is that in August everything went up because of this change in Fed expectation, and we don't think we have ahead of us the same diversification benefits, and we think that we have huge volatility in the coming months because of the Fed meeting in September and, of course, the US election in November, which actually, if you think about it, all the catastrophes that we had in early August, nothing has changed. I mean, the yen carry trade or geopolitics or the uncertainty on US politics. So we expect volatility, but still fundamentals are okay. So a pullback of, 5% on US stocks, maybe 20 bips higher on the US Treasury curve is possible. It won't be very a nice time for us, but I don't think we should play that, and the medium term should be okay.
So being cautious for the time being, for short term.
We're slightly defensive, but we don't want to go outright bearish because fundamentals are still supportive. We believe in this soft landing with moderate easing on the monetary side.
Very clear. Maurice, thank you so much for coming on the show. Maurice Gravier, the Group CIO for Emirates NBD Wealth Management. Well, still ahead, warnings of an environmental disaster in the Red Sea where an abandoned oil tanker appears to be leaking. We have the details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. The U.S. is warning of an environmental disaster as an abandoned oil tanker in the Red Sea appears to be burning and leaking. The ship was carrying 150,000 tons of dense Iraqi crude when it was attacked a week ago by Iran-backed Houthi rebels. So let's bring in Bloomberg's oil and shipping reporter, Wei Lun Soon, who joins us from Singapore. Wei Lun, just get us up to speed on this story. And of course, many people are really sounding alarm bells because of the potential consequences of this oil spill into the sea. Just walk us through the latest developments and what's going on.
Thank you, Jumana. So overnight in Asia, we have learned that the Iranian mission to the United Nations have informed that the Houthi militants are now allowing passage to the burning ship that's now sitting in the southern Red Sea. So this is a really welcome development because the ship has been burning at sea for almost a week. And there have been attempts, as we learned from the Pentagon on Tuesday, that 2 tugboats attempted to salvage the ship, but they were actually scared away or warned away by the Houthi militants. So them now allowing this passageway to reach this ship is really a welcome development.
Well, I saw the European Union's naval force was describing an imminent environmental hazard, a potentially severe ecological disaster. Why is all of this so important? Why is it so important for the Houthis to allow access to clean up?
Right. And so we have to look at this ship. The Sunian is carrying 150,000 tons of crude oil, as you mentioned. That's around 1 million barrels of oil that's sitting out there, floating in a burning ship. And every day that the ship is out there at sea, we risk a high risk of that oil leaking into the sea. So what we have heard from the Pentagon on Tuesday, which is Major General Ryder, he specifically said that it appears that the ship seems to be leaking. And that's the first official confirmation that we have from authorities that there could be a risk of an ecological disaster. If you think about the Exxon Valdez disaster that happened many years ago, that pales in comparison, because that's the potential for the Sunnian to leak all of its cargo into the sea could be a 4 times larger kind of an oil spill than the Exxon and Valdez disaster. And there has been estimates that if all of this leaks into the sea, it will be the 5th largest oil spill on record. And of course, we have to be sure that modern ships, the oil is in tankers, and that could be just the bunker fuel rather than the cargo that's leaking. But any sign is a concerning sign.
Yeah. I was just going to say, if we have any signals at all on timing and how long it's going to take for this cleanup to take place.
We are still unsure, because the EU and American forces are still coming up with an appropriate response. I think a lot of it has been because the Houthi militants have been preventing access to the site. But now that, if that is true, we will very soon come out, hear from the authorities to see what sort of next steps they're going to take.
Yeah. Waylon Sun, thank you so much for the report on that very important situation in the Red Sea that we're monitoring. Well, Libya's oil output has more than halved this week, taking close to 1 million barrels a day off the global market. That is as the country's fields reduce operations amid a stalemate over who controls the central bank. Let's bring in Vandana Hari, founder of VANDA Insights, who joins us from Singapore. Good morning to you, Vandana. What I find interesting about the energy complex the last couple of days is there have been so many potentially bullish risks. You've got the shutdown of oil output from some of these Libyan fields. You've got the rise in geopolitical tensions. Even yesterday, the U.S. inventory stockpiles showed yet another monthly decline. And yet, oil cannot see a sustained bid. What does that tell us?
Yeah, good morning, Jumana. I think quite simply what is happening is that the market is way more focused on downgrading global oil demand and demand growth, especially compared with perhaps what would have been estimated at the start of this year or even through the first half of this year. So it is still a balancing act. The market participants are pondering what's happening with the demand, to some extent also the increase in output from OPEC Plus that we're going to see in the fourth quarter of this year. And on the other hand, the risks. So when you talk about Libya, it's very clear, reports finally, we know about 500,000 barrels per day of Libyan production has been shut in. The situation wasn't very clear through Monday and Tuesday, so perhaps that made a difference. But when you look at what's happening in Ukraine and Gaza, and of course, you tend to put all of that in the bucket of this is geopolitical risk premium, but the two things are very separate. So Libya versus Ukraine and Gaza. So on the latter two, basically the market has concluded, rightly or wrongly, with some degree of certainty, that it's not leading to a supply risk situation. So that's the reason those are the two things. So demand drag is too big right now, and supply risk is not really being seen as too big.
Yeah, well, OPEC Plus are supposed to be putting back output into the market in the fourth quarter. Will they and can they, with Brent trading at a $78 handle?
Yeah, so the bubbling up of demand concerns, and especially over the past month or so, the downward pressure we've seen on crude, and not to forget, crude touched year-to-date lows just a few days ago. That has definitely, I would say, opened the window for perhaps the OPEC Plus members to rethink. But I don't really see them hitting the panic button just yet. I think the pain point really for them is Brent diving towards 70 or lower. We are certainly far from that right now. Brent has been at least in the high 70s in the past few weeks. So it's also, for OPEC Plus, it's a very asymmetric cut. I think we need to bear that in mind. Only 8 of the 18 members that are bound by quotas are actually contributing to this cut. Saudi Arabia alone, nearly half of it, right? So it's quite a bit of burden for Saudi Arabia. And if you look out into 2025, demand growth is not necessarily looking that much brighter. So when do they taper, if not now?
Yeah. Who do you think is in the driving seat right now as far as the price of oil is concerned? Is it non-OPEC supply? Is it U.S. supply? Is it China demand? Is it broader global economy? Is it OPEC Plus themselves potentially putting more barrels in? What is it?
So all of the above, Jumana, but I suppose you're asking for like which is the main dominant force. It is demand concerns. So these are in turn linked to economic concerns. So if you look at what's happening in Europe, especially Western Europe, the major economies of Western Europe, and we saw German figures earlier this week, second quarter in contraction. If you look at China, so if you look at Europe and China, definitely there is no debate that they are facing major economic headwinds. If you look at the US economy, everything seems to be revolving around this sort of hope mixed with speculation or even fear as to whether the Fed will be able to engineer a so-called soft landing for the US economy. So the economic picture overall is leaving the market slightly pessimistic and slightly on tenterhooks. That as a proxy for oil demand doesn't bode well. So it's definitely demand in the driver's seat.
Yeah, very clear. Vandana, always a pleasure to chat to you. Vandana Hari of VANDA Insights. Thank you for coming on our show. Well, plenty more ahead. Stay with us on Horizons Middle East and Africa. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Johanna Bersachi in Dubai. Now, the new staff at Libya's central bank have run into a problem as they take over operations. They don't have the passwords to key systems. The regulator has been at the center of a fight between Libya's eastern and western governments, with the central bank governor ordered out in mid-August. Now, as new administrators take over, they've pleaded for access to payment systems to allow them to resume banking operations. So that is a bit of a summary of some of the developments going on in Libya. Of course, a lot of infighting going on between the eastern and western governments. I also just want to bring you some of the highlights of the report put out just now by the IMF vis-a-vis Turkey, saying that Turkey needs larger fiscal consolidation for disinflation. Obviously, this has been a key focus for the Turkish economy. The latest inflation figures came in at around 62%, down from 85% earlier on in the year. But it does tell you that this isn't just a central banking effort, but now the IMF are saying larger fiscal consolidation is needed as well, something that, of course, the finance minister Shimshek will need to take into consideration. They still see growth of 3.4% this year and 2.7% in 2025. But a quick look at markets before we head out to the break. Markets are leaning towards negative. When we come back, we're going to be talking more about the latest developments in the region. This is Horizons Middle East and Africa, our top stories this morning. Nvidia's earnings report casts a shadow over Asian equities as the chip giant underwhelms investor expectations. Environmental alert. The Pentagon warns an abandoned oil tanker in the Red Sea appears to be leaking after an attack by Houthi rebels. And Israel launches deadly raids in the West Bank in the latest surge of hostilities in the Palestinian territories. It's just gone 8:30 a.m. across the Emirates. I'm Johanna Bersachi in Dubai. The markets are reacting to Nvidia's results, and even though they did come in relatively in line with expectations, we have seen quite a big drop in terms of the stock itself, trading down about 6% in after hours. Nasdaq futures, you can see behind me, also dropping about 0.6%. This after a weaker close yesterday, with the Nasdaq also struggling to hold on to gains, closing down about 1%. So some nervousness prevailing amidst the tech sector as we head into the European session. The S&P also down 0.3%. 10-year yields trading sideways, still at 3.83%. Not a lot of movement there, but later on today we get jobless claims. There's going to be a lot of focus around that data, given the sensitivity of the U.S. labor market prints as of late. And then tomorrow, of course, PCE numbers to watch out for. Brent also in focus. We were discussing earlier on in the show that the demand outlook and the weaker demand outlook, specifically coming from from China is one of the reasons why Brent is struggling and cannot seem to hold a bid or stay above $80. Switching over, though, because Nvidia is the topic du jour, I thought it was interesting just to remind everyone how bullish the analyst community still is on this stock. Yesterday, before earnings, we closed at $125. The average target price is $145. So the analyst community is still very bullish on where Nvidia can get to. And this, despite some of the takeaways yesterday being perceived to be the market as not really bullish enough to continue with constructive sentiment. We'll see, obviously, how this stock evolves throughout the course of the day. But interesting to note that the analyst community is still very bullish on Nvidia. All right, let's check in on how markets in Asia are faring as well. Huang is in our Singapore studio standing by. Avril, give us an overview.
Yeah, Jumana, let's focus on Japan because we're seeing the Tokyo Electron Star among the chip names in the region that are declining. It's a 7th straight session where we're seeing losses, and it's outpacing that of what we're seeing on the topic. So that's interesting in the sense that Asia's stock gauge is down, dragged, no surprises, by the info tech sector. But if you lift the hood a bit, we're actually seeing gains in utilities as well as the healthcare sector. So that gives you a sense of maybe, yes, it is risk off, tech is getting hard hit, but there's also a bit of rotation into these other sectors. And the declines on the broad-based gauge are not as bad as well. Also wanted to highlight how we're seeing that firming in the Japanese currency. It's headed for its second straight month of gains. Today, we also got a JGB auction for 2 years, and that actually saw a bid to cover ratio 5 times, the best since 2019. Gives you a sense of how higher yields in the past 2 weeks have drawn in Japanese investors. But yes, as you say, it's really been the focus about Nvidia. Jumana.
Avril, thank you so much. Avril Huang in Singapore. Now, more from Bloomberg Technology's exclusive interview with the Nvidia CEO Jensen Huang, who told us about the government deals driving so-called sovereign AI.
It's not necessarily, sometimes it's deals with a particular regional service provider that's been funded by the government, and oftentimes that's the case. In the case of Japan, for example, the Japanese government came out and offered subsidies of a couple of $1 billion, I think, for several different internet companies and telcos to be able to fund their AI infrastructure. India has a sovereign AI initiative going, and they're building their AI infrastructure. Canada, the UK, France, Italy, I'm missing somebody. Singapore, Malaysia, a large number of countries are subsidizing their regional data centers so that they could become able to build out their AI infrastructure. They recognize that their country's knowledge, their country's data, digital data, is also their natural resource. Not just the land they're sitting on, not just the air above them, but they realize now that their digital knowledge is part of their natural and national resource. And they ought to harvest that and process that and transform it into their national digital intelligence. And so this is what we call sovereign AI. You could imagine almost every single country in the world will eventually recognize this and build out their AI infrastructure.
Jensen, you use the word resource, and that makes me think about the energy requirements here. I think on the call you talked about how the next generation models will have many orders of magnitude greater compute needs. But how will the energy needs increase, and what is the advantage you feel Nvidia has in that sense?
Well, the most important thing that we do is increase the performance and efficiency of our next generation. So Blackwell is many times more performant than Hopper at the same level of power used. And so that's energy efficiency. More performance with the same amount of power, or same performance at a lower power. And that's number one. And the second is using liquid cooling. We support air cooling, we support liquid cooling, but liquid cooling is a lot more energy efficient. And so the combination of all of that, you're going to get a pretty large step up.
Nvidia CEO Jensen Huang speaking exclusively to Bloomberg Technology co-anchor Ed Ludlow. Now, Israel has launched deadly raids in the West Bank to combat what the army says is terrorist activity. The latest surge in hostilities in the Palestinian territories left at least 10 people dead, according to the Palestinian Health Ministry. Let's bring in Paul Wallace, who leads our economics and government coverage for the Middle East. Paul, just walk us through the latest developments, this time in the West Bank, it should be said, not Gaza.
Yes, so it was a pretty major raid by Israeli forces into the West Bank on very early Wednesday evening. At least 10 people were killed, according to Palestinian authorities, and 11 injured. The United Nations implied that some children were among those that were killed in the clashes. Israel says it was going after what it calls terrorist militants, and it's been saying in recent months that there's a growing problem in the West Bank. It claims that Iranian arms are getting into the West Bank through Jordan. It's very difficult to corroborate that, what they're saying. But anyway, they're increasingly worried about the West Bank. There has been a lot of concern about these raids from the international community. The EU said that it did not want to see these raids effectively amount to an extension of the conflict in Gaza to the West Bank. So that's what they're worried about. Around the same time as these raids, or shortly afterwards, late yesterday, the US actually sanctioned two settler groups, groups of Jewish settlers in the West Bank. It effectively said that these groups are carrying out violence towards Palestinians. The Israeli government hasn't said too much yet, but it did put out a statement implying that it wasn't happy with the US and that Netanyahu said that he was in pointed discussions with the Americans about these. So all these things are going on in the West Bank, and violence
and to what extent
rising.
Is what is happening in the West Bank likely to affect the situation in Gaza as well?
It's a good question, and it's difficult to tell. The West Bank has not been ignored since the war in Gaza began, but it's not been in the media too much. However, that's been changing, I think, in recent weeks because the IDF has been doing more raids. There have been more clashes between Jewish settlers and Palestinians in the territory. And in some ways, the West Bank has been in turmoil since October as well. Obviously, nothing like what we're seeing in Gaza, but more than 600 Palestinians have died in clashes with Israeli forces or Jewish settlers. So there's a big problem there. And I think it just adds, what we're seeing now in the West Bank just adds to the general tension, not just in Israel and the Palestinian territories, but in the broader region. And if anything, it's not going to calm the situation between Israel and the likes of Hezbollah.
I was just going to say it's quite a jarring juxtaposition because on one hand we talk about ongoing ceasefire discussions, the fact that on Sunday after the Israel-Hezbollah attacks, Israel still sent a delegation to Cairo to continue along with these discussions, and yet we are hearing of more violence in the West Bank, more day-to-day attacks in Gaza as well. And so it raises a question as to how serious really these ceasefire discussions actually are.
Absolutely, and that's a crucial question. And on the surface, they are continuing. There were talks yesterday in Qatar between sort of low-level negotiators from Israel and Qatar and Egypt, two of the main mediators. But they don't seem to be making much progress. There's still big issues between the two sides, and fighting continues in Gaza. I think one thing that's important to note is that Prime Minister Netanyahu's office denied reports in Israeli media that came out late yesterday, saying that there'd been a pause in fighting in Gaza to allow polio vaccinations. Netanyahu's office said that was false. They implied there'd been sort of a pause in very small areas to start administering vaccinations, but essentially the war continues.
Well, and even the fact that polio vaccinations have to be administered is quite stark indeed. Paul, thank you so much for giving us the latest from Israel and the region. Bloomberg's Paul Wallace. Now, Israel's central bank did keep its benchmark rate at 4.5% for a fifth straight meeting. The deputy governor says cuts are unlikely this year, given the length of the war and the impact on inflation. He says with market analysts predicting inflation surging to 3.5% by January, it might not return to the bank's target range of 1 to 3% until the end of next year. And Ukraine has received wide support from private creditors to restructure its overseas bonds. Investors holding over 97% of Ukraine's $20 billion in international bonds will swap their securities for new notes, according to a London Stock Exchange filing. The agreement, more than 2 years after Russia's invasion, secures much-needed debt relief to finance its war efforts. The new bonds will begin trading after the Friday settlement date. And ADNOC has largely completed due diligence on its planned $13 billion bid for a German chemical company, Covestro. Sources tell Bloomberg it would be the state-owned energy firm's biggest ever deal. They say ADNOC hasn't found any red flags after visiting major Covestro plants, and an offer could be made as soon as September. It is understood final sign-off from senior officials is still needed for the planned bid of €62 per share. And French prosecutors have charged Telegram CEO Pavel Durov with complicity in criminal use of the app, including for drug trafficking and sharing images of child sexual abuse. They say Telegram also refused to help run wiretaps on criminal suspects. The billionaire is being ordered to post €5 million bail and banned from leaving France. Telegram didn't immediately respond to a request for comment on the charges. And coming up, Dubai's toll operator is opening 2 new gates after reaching an agreement with the RTA. More from the Salik CEO next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Persechi in Dubai. Dubai's toll road operator, Salik, has raised its full-year financial guidance after announcing the valuation of 2 new gates. The barriers at Business Bay and Al Safa South have been priced at 2.73 billion dirham. They're expected to be up and running by the end of November. So to talk about this and more is Ibrahim Haddad, the Salik CEO and board member. Good morning to you, sir. Let's just pick up and talk about those earnings. It sounds like it was a very strong start to the year. First half revenue up 5.6% year-on-year. You've also revised upwards your guidance for 2024. What is guiding these strong results?
Good morning, Jumana. Thank you for having me. As you correctly said, Salik continued to deliver a strong top-line performance. In the first half of 2024, we achieved a 5.6% year-on-year increase in revenue. It is 1.1 billion dirhams total revenue. The total generating trips lever is the most important one for us. Reached 238.5 million trips, growing 4.9% year-on-year, with industry-leading EBITDA and the free cash flow margins of 67.4% and 62.8% respectively. We also achieved a 9.2% increase on total revenue before tax, and after tax we still stable, although we are exposed to a 9% corporate tax in the UAE for the first time this year. We maintain the profitability level. What really drives this, Jumana, is not only the revenue we are generating from tolling business, but also our aim to diversify our business, like the launch of the parking system that we did in collaboration with Emaar in Dubai Mall.
Yeah. Let me just ask you, there were floods, quite major floods in April of this year. What sort of an impact did that have on your revenue specifically for the second quarter?
Very, very minimal impact from a revenue standpoint. There was work from home, 1 week of work from home. However, the weeks after, it's just like compensated the losses that we had for that work from home week. But again, from financial standpoint, quarter 2 is usually the weaker quarter comparing to the quarter 1 due to the seasonality of the movement of transportation in Dubai overall. But we still reach 3% higher revenue comparing to the previous year.
Right. Right. So talk to me about the new 2 toll gates that you acquired, one in Business Bay, the other one in Al Safa South, part of your expansion plans, of course. But is this it for your expansion plans? And how additive do you expect the addition of the 2 new tolls to be?
So this is a very important milestone for the company, Jumana. We are a tolling operating company. We need to thrive in tolling business. And this is the Salik mandate in the first place, besides diversifying revenue. So the target of the operation of the 2 new gates is going to be the last week of November. The project execution from construction standpoint is as planned. We don't expect any delays from that matter. Another reminder will go to public from RTA and Salik issuing the exact commencement of operation. So the 2 gates, as you said, the combined valuation is 2.7 billion. The Business Bay gate is 2.2 billion, and the Safa is 469 million dirham. That valuation range was determined using outputs from commercial advisors from both Salik and RTA, and the difference between the 2 valuation was within 5% threshold. We also reached to an agreement with RTA for payment term that we're going to pay an installment, interest-free installment over the next 6 years. You asked me about if there will be more gates. Of course, as the city grow, RTA is actually the custodian of these studies. They are considering the impact of the population growth and the number of visitor growth in the city, and of course trying to optimize traffic, but not only through Salik, not only through gates, but also through developing new road infrastructure and enhancing the existing ones, and of course introducing and encouraging public transportation.
Yeah, and let me just round up the discussion by asking you, should you choose to expand further, how would you choose to do it? Would you look to perhaps do a debt offering or perhaps go for a secondary share offering? Are these the elements that you've considered?
We are currently in discussion, of course, with the government. We are conveying the message from investors in terms of follow-on offer. We do see the benefit of that in terms of providing liquidity and enhancing the profile of the company to the global market. We are still waiting for that decision to be made. We are, of course, trying our best to create value for our shareholder, and hopefully we will be successful in doing so.
Great. Sir, a pleasure to chat to you. Thank you so much for coming on our show today. Ibrahim Al-Haddad, Salik CEO and board member. Also, coming up, rain could be coming to southern Africa as the worst drought in 100 years ravishes crops and livestock. We're live in Johannesburg next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Relief may soon be on the way for southern African nations battling with record drought, with a regional body predicting better rainfall. Farmers from Zambia to Mozambique have suffered the worst dry spell in more than a century, killing livestock and crops right in the middle of the growing season. So for more on this, let's bring in our Africa correspondent, Jennifer Zabazaja, who joins us from Johannesburg. Jen, it looks like some relief is expected to come due. When is it going to come due, according to the officials?
That's right, Jumana. I don't think it's a stretch to say this is an opportune time, at least this news from what we're understanding. So we got some updates that potentially there is a probability that we'll see normal to above normal rainfall in parts of southern Africa that you were just mentioning there. And of course, this is being triggered by the changing weather patterns going from El Nino to potentially La Nina, which then means cooler and potentially wetter weather. And as you were just mentioning there, I mean, this has really been a difficult time for farmers and really for a lot of these countries. On the humanitarian front, there's been estimates that more than 30 million people have needed increased food aid just because of the lack of harvest that there has been. Of course, we have to note that a lot of these countries rely on these harvests and these crops for their own exports and their own economies. So that has, in fact, had an impact as well. You were mentioning there, of course, the livestock. And then there is the impact on inflation and prices of some of these staple items that people are eating on a day-to-day basis. And so potentially we will see wetter weather and then that will start to ease up some of the stress and the strain that a lot of this part of the world has been struggling with for the past several years.
And what does it mean for production figures in the next harvest year? Clearly, they're dealing with the situation now, but what is the bearing on the future?
Right. I think it still remains to be seen, but we did get some updates on Wednesday that could potentially indicate a little bit of relief. We could potentially see some of those figures revised down. And in particular, talking about being revised down, if you take a look at this chart right now, one of the key staples here in South Africa, corn, was actually production levels were revised down from the past few months. You can see there in August, officials are expecting even lower harvest than was previously anticipated. And so potentially if we do see this La Nina weather pattern adjusting, potentially will have an impact moving forward on corn, and in particular white and yellow corn that is used for maize in this part of the world.
Jennifer, thank you for bringing us up to speed. Jennifer Zabazaja, our Chief Africa correspondent, on the latest with those African droughts. All right, a quick look at markets before we head out for this show. And of course, the main focus for investors has been the results from Nvidia. Even though their revenue has pretty much doubled year on year, the guidance perhaps underwhelmed, and that is setting the tone as we head into the U.S. and European sessions. U.S. futures are seen lower, NASDAQ down 0.6%, but Dow futures actually seen opening positively. All right, that was it for Horizons Middle East and Africa. Stay with us for Daybreak Europe. I'll be back.